Aloha, everyone. It was another ugly session for the stock market today, and today's morning gap up. At one point, the futures were up 1%. We reversed those to close near the low of the day today, down 1.5% in the NASDAQ. That following the intraday reversal from 2 days ago when we were rallying, got up to about 47.51 and then reversed all the way back down to close at 46.61. That's 2 out of 3 days of very, very ugly reversals, not to mention the one on the 9th. Today's reversal, basically, with that above average volume and leading stocks now breaking down everywhere, and me personally getting a ton of sell signals in my current holdings, throws our market model under a sell signal. We have been under a neutral signal since December 10th. The market has been extremely volatile since December 10th. What's crazy is that the market has hit volatility levels that you normally see at bear market bottoms, 2002, 2008, 1987, yet we were right near the highs. That either suggested that we are actually bottoming and that the market is going to get very strong, or else something really bad is coming around the corner, and it's looking more and more every day like that's what's happening. And one of the most shocking currency moves I've ever seen in my entire life. I have never seen a move like this ever. Switzerland decided to unpeg their Swiss franc to the euro, and that caused a huge rally in the Swiss franc and just destroyed some currency macro hedge funds in what, 1 minute today. So within 1 minute, some macro funds are completely bust. They're done over this move, but it's one of the most insane things I've ever seen in a currency. I don't know a ton about it just yet, but I'm going to be doing more research tonight because it's just an interesting subject. But if you don't think that that isn't a sign of some possible bad things to come, oil actually looked like it was doing its best to attempt to bottom. And I believe that we are seeing some bottoming action in oil stocks, and it still appears that they could be. I mean, a lot of these oil stocks definitely are not rolling over, obviously, to new lows and below recent support levels. But the bottom line is that oil now looks a bit, suspect to even further pullback. I would have figured we would have continued to move higher. The one thing I didn't expect was for oil to be up 5% today and then down 5% by the close, giving a 10% swing. I mean, it's getting extremely volatile out there. And another indication of something really bad that might be around the corner is that the biotech stocks, they just did a fake out breakout. They're one of the very few sectors that we're still holding up. And today they've officially broken down with like some of my big winners. Like look at Kite. So Kite just went from being well, we just look how quickly we lose gains in this market. This is just an insane, insane tape. I'm trying to figure out where I went long because I'm gonna have to go to function 9. Sorry guys. So went back here. Wow, that's how lost I was. So Kite went from being a 65% gain in less than a month to a 36% gain overnight. And that's what we're dealing with in this market, some extreme volatility. So when you see moves like that in Kite, my new recent long position, Arwell IP, an immediate reversal, that is not good. On top of that, the bank stocks, after gapping down yesterday due to an earnings miss, JP Morgan, JP Morgan sold all the way off. I mean, sold all the way off to 55.27 and then reversed higher to close at 56.81, indicating a potential big successful test of those October lows. Forget that. JP Morgan is closing down at 54.99, completely giving it up. And this weekly chart is extremely ugly. Bank of America, that is extremely ugly. Citigroup, Goldman Sachs, this is not good. You normally in strong markets have banks leading the way higher, and when they look like this, big red flag. So you got banks and oil faking out a potential bottoming signal. You got the one leading sector, biotech, doing a fake out breakout to new highs, and then the one remaining sector, REITs, look like they're going on a parabolic run. So this is starting to get a little out of hand, and this is the one area of the market still moving higher, and it's getting a little ridiculous with a lot of volume coming in on this final leg. So even it looks like it's going to be, a rough ride. And now if we go to stocks and just look at a lot of the leading stocks out there, let's look at GoPro. Rolling over, head and shoulders like top, very ugly. Alibaba, same thing. Those are your leading IPOs, and they don't look good. Facebook has finally cracked the 50-day moving average on heavy volume. LinkedIn, its brother, has followed through also. Apple has has that head and shoulders look to it also, but this kind of a little bit different. It's got a shoulder here, a head here. You can call it like double shoulder here, or you could say that this is high, which it isn't, but it's basically a series of lower highs. And if this breaks the lows in January, you'll have then lower lows. But bottom line is not a pretty chart at all. You can see stocks like Priceline and Google, they're ready to hit new lows. Priceline already hitting new lows. So it's ugly. It's ugly, 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 ugly out there. And what's funny is that we're near new highs. We're only about 5% off of the highs. So what the ideal situation here now is for us to start to rally here. My charts are broken everywhere. This is the worst that any start of a sell-off has looked, and right now we're in a no QE environment. And what's unfortunate about this is that in any other time in history, we know that we're about ready to enter a big bear market. Don't forget, the entire crowd's bullish. Everybody's buying this dip right now. Just go on Twitter right now and Facebook and read what all the new traders are posting. This is finally the dip that's going to probably burn them unless they launch another QE. So if we get another round of QE, we're screwed. And we got to wait for our long signals to reset up again. But I don't think it's going to work this time around. We got interest rates cratering even further. So, I mean, that's another thing. Here's one of our long positions, TMF. Who would have ever thought when we got this long signal back here in November that TMF would move up 41% in 2 months? I mean, just there's no way. Bond yields just continue to crash to new all-time lows. So it's a pretty crazy situation that we see out there. And we're going to start adding to our hedges. We're going to initiate a hedge in the biotech sector. You're going to have hard sell stops on the book. 4206, 4160 are going to be your first two, and obviously the final one's going to be here, 4050. I really doubt we're going to see that level for a very long time. Also, we're going to add to our SQQQ hedge that we already have working. It has given a third pocket pivot point signal in a row. Unheard of. I'm not even sure if I've seen that before. And SPXS is giving another pocket pivot point signal. We're going to add to this position. Did we get taken out of some intraday? Yes, thanks to the gap up tomorrow that was yesterday gap down, excuse me. Thanks to the gap down that was so extreme yesterday, it caused our inverse ETFs to gap up. It also made me so confused about how to handle my put positions that I bailed on buying puts in the SPY and Qs and went ahead and just bought the inverse position, so I'm going to stick with it now. And that's another thing. There's no fear in this market. The fear levels in October and December were higher than they are now, and there's still no fear then. Don't forget, as a reminder, back in 2008, the VIX hit 89, and we're currently at 22. We're nowhere near fearful. The new II and AAII surveys just came out, and the crowd is bullish as can be. And also, I saw that the Bear Ridex Fund, the Ridex Bear Fund, as of January 14th, was at new all-time lows. There's never been as few people invested in a bear fund as there are now. So that tells me that everyone's bullish, everybody's ready to buy stocks, and we have the ugliest technical patterns we've seen since 2008. So this is going to be very, 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 very interesting in the days ahead. Now that we're under a sell signal, as you're going to see on the new positions page, I'm not going to list them here as the video is already long. We have a lot of sells. You got to obey them, and I'm raising my sell stops on everything. I don't want any of my big winners to give back much more of their gains, and I want to make sure my losses are small on the remaining positions.